Hello, everyone, and welcome back to SALT Talks. My name is John Darcy. I'm the managing director of SALT, which is a global thought leadership forum and networking platform at the intersection of finance, technology, and public policy. SALT Talks are a digital interview series that we started in 2020 with leading investors, creators, and thinkers. And our goal on these talks is the same as our goal at our SALT conferences, which we're excited to resume here in September of 2021. And to have our guests participating on an exciting panel at that event. But our goal is to provide a window into the mind of subject matter experts, as well as provide a platform for what we think are big ideas that are shaping the future. And this summer, it's Solana summer. There's no bigger idea than the growth of Web3 and decentralized finance. We're very excited to bring you a special SALT talk with Anatoly Yakovenko of Solana. Anatoly is the creator of Solana. He led development of operating systems at Qualcomm for more than a decade, distributed systems at Mesosphere, and compression at Dropbox. He holds 2 patents for high-performance operating systems protocols, was a core kernel developer for Brew, which powered every CDMA flip phone, and led development of the tech that made Project Tango AR/VR possible on Qualcomm phones. Hosting today's SALT Talk is Anthony Scaramucci, who's the founder and managing partner of Skybridge Capital, which is a global alternative investment firm. It was the first fund to funds and first registered 40 Act fund to make direct allocations into the crypto space. So we like to think we know a few things about crypto, but certainly not anywhere near the level of our great guest today, Anatoly. We're excited to have you. With that, I'll turn it over to Anthony to drive the majority of the interview.
So, before we got started recording, I said to Anatoly, his backdrop makes him look like he's coming in from the future, okay? And so that is more or less the truth about your life, Anatoly. So you're a hardcore engineer. You spent most of your career at Qualcomm. Tell us more about your background that led you to build Solana.
I'm an engineer by trade. I went to University of Illinois. Started really my engineering career there at a startup with some friends that were, I was trying to build voice over IP phones. This was back in 2001, 2002, and saw the dot-com crash as a student. And then at that time, advisors were telling me that computer science would not be a good career choice. But ended up in San Diego, working for Qualcomm, and started really working on optimizations, all things making software faster. From day one. And really, my experience there, I got to see the mobile revolution. If you guys remember, phones in 2003 were not like the supercomputers that we hold in our hand today. And that transition happened over a decade and really powered by the amazing people at Qualcomm, at TSMC, across all the fabrication, the entire fabrication industry and mobile chips. That was a huge 10 million person effort, right, around the world to make that possible. And I was working on a small piece of it, writing high performance firmware. But seeing that transition really showed the power of Moore's law to me. And this is something that has been kind of like, exponentials are really, really fast from far away. 20 years is 1,000x improvement. But in the moment right now, it's going to take 2 years just to see a doubling in performance, and that may seem like really slow.
You talk about the epiphany that you had, and you were talking about the construction of an arrow of time and what you set out to do with Solana. Explain what that means to our audience.
Yeah, there's an interesting problem in mathematics is there is no clear definition of time. Einstein's equations work in both directions, forwards and backwards. And we take this for granted, as engineers. You look at something like second generation cellular networks. There were these things called time division multiple access networks. It literally means that you have a source of time that tells which cell phone, which tower has the right to transmit over a certain frequency. And that's how all these networks get coordinated, and folks can then transmit information to a large number of people across the same channel, the same shared channel that is rotated through time. This was, first thing an engineer thought of when they started building these things. And that's really hard to pull off in crypto and blockchain because this new kind of technology is built with very different trust assumptions. There is no AT&T. There is no FCC, right? There is no central authority that says what time it is or who gets to produce a block or who gets to be what part of the network. And that's a really tough, challenging problem. So this epiphany that I had once I realized that there's a way to construct a source of time that doesn't depend on a central authority, doesn't depend on AT&T or anything like that, or FCC, then we can start building the same level of high performance wireless kind of optimizations, but now applied to blockchain, not applied to crypto.
So, I'm going to put it this way because I think it's appropriate. Part of your genius is taking ideas from your prior life experience and watching them unfold in cellular technology and then applying them to blockchain. So, Steve Jobs, I want you to react to this. Steve Jobs once said that genius is a remix of ideas and seeing things on parallel planes that somehow connect. Is that true in your case?
I'm 100%. I'm standing on the shoulders of giants, all the stuff that we're doing, the algorithms were worked out in the 50s and 60s. The engineering was done in the 70s and 80s. And now we get to apply it to these new emerging technologies over and over as engineers. So we get to reuse the experience and the brilliance of all these amazing people that came before us, for sure.
So, there's a difference between proof of stake and proof of work. And so there are many listeners here that don't know the difference. If you could describe what the difference is between proof of stake and proof of work.
So, that's a tough question. It's hard to describe because the problem is hard to explain. It's how do you trust anybody on the internet, right? Like, how do you know that when you make a poll on Twitter and you say, you think that, omelets are the best breakfast, that you see it, you see those votes that actually come from people instead of bots. That's a tough problem. And proof of work is a way to solve it by forcing every vote to contain a proof that some amount of electricity was spent to generate it. So somebody somewhere had to go and burn some energy to do it. And that's how Nakamoto consensus or Bitcoin and Ethereum, the Peer network, and most of the other major cryptocurrencies work. But this is, wildly energy inefficient. So it costs a lot of money to do this process because you have to go pay somebody for the electricity to go generate those proofs. Proof of stake.
So proof of stake is better than proof of work?
It's different. So the cool thing about proof of work is that it's real physics, right? It's real electricity. There's no way for somebody to fake it. And the way that proof of stake works is that it relies on a common agreement of what the network is, and then a way to split the weights of those votes and transfer those votes cryptographically. So equally secure from a consumer's perspective, right? But fundamentally, they're kind of two sides to the same coin, but different sides. Proof of stake doesn't require any energy, but requires a lot more software complexity, a lot more infrastructure. I think it takes more resources, brain resources to run. You gotta just spend a lot more time making sure that that the keys are secure, that there's no way for attackers to go leak them, and a bunch of other stuff. Proof of work is in a lot of ways kind of much simpler. It's like a motorcycle gas motor, right? There's two cylinders in it. You pour the gas in, it runs. Versus something like a Tesla, where it's a much more complicated system but much more efficient.
Okay, I think you did a great job explaining that. There's a lot of maximalism and tribalism in crypto. Some people are Bitcoin maximalists. Some people are Solana maximalists. Others are ETH maximalists. What do these guys get wrong, if anything? Or are they right, and should everybody be a Solana maximalist?
So I've seen this as in emerging technologies over and over. I mean, I remember when people were fighting over Linux file systems. There were maximalists that believed that a certain kind of file system for your Linux distribution was better than anything else. And I think this comes from when you're building something really complicated, like a personal computer, right? Like where there's the idea is much bigger than the technology, and the technology is so complex that you start to rely on your gut feel of what is going to bring about like change in the world, right? Is it going to be Apple, this vertically designed thing, and I become an Apple fanboy and an Apple maximalist? Is it going to be Linux, an open source community, or is it going to be Microsoft, right? This vertically integrated company with a great founder. Like it's really tough to like make those decisions in a very objective way, and that's I think the source of maximalism. And I think in some ways it's just part of the growth process of any new emerging transformative technology. If we thought that crypto was gonna be, like a fad, we wouldn't have maximalism. Like it would just go away and peter off. But because it's such an idea that is so big and so much bigger than anything else, that I think this is where it comes from. When people really try to grasp it, right, and try to understand it and fit all in your head, but it's so big that it's pretty hard to do.
All right, well, you're doing a great job. So I want to keep going here, and I hope you don't mind the complexity of these questions, but I think it's important for our listeners because you're at the forefront of something. They're watching something emerge and prosper and grow exponentially, and I think learning from you as the founder, I think is super important. It's sort of like we're right here at the inception. Let's talk about Sam Bankman-Fried, a favorite of yours and a favorite of mine, and also John Darcy's. Sam is the CEO and founder of FTX. He's really building the first, in my opinion, I think he has the capability, at least, of building the industry standard, the Microsoft, the Tesla, the Google of crypto with FTX. And so he's a brilliant young man. He decided to build FTX's decentralized exchange known as Serum on top of Solana. I think it's pretty impressive. So how did you convince him to pick Solana, and why do you think he picked Solana?
So, yeah, we had our first conversation now, like literally a couple of weeks after we launched, and that was a year and a half ago, not even that long ago, less than a year and a half ago. And we showed him this demo where it's a very simple page. You load it and you start smashing your keys and you see a cryptocurrency transaction fired off and get confirmed as fast as you can type. So every keystroke was generating a transaction. And when you compare that to something like Ethereum or even the competitors that have launched since today, there's a stark difference between the user experience of dealing with this network with there versus what you see now. And that's really what like set up the light bulbs in their head, right? And Sam said, and their engineers, and really from the engineering team came this like drive. Let's build the best version of a decentralized exchange. We know how to build the best version of a centralized exchange. Let's do the same, and now it's possible. This is something that they've been wanting to do internally for a very long time. So they incubated this project, Serum, and now it's got a life of its own. There's independent developers that are building on it, working on, next versions of it. And it's, it's really cool to have somebody like Sam, that has a centralized service to commit to building something that could disrupt them, like fully commit to it, right? Like how often do you see that, right? Like I think Steve Jobs and like seeing how the iPad and the iPhone disrupted their iPod sales, right? Like, which is the biggest driver of revenue for them. Fully commit to something, a new product line that was risky, but totally disruptive to the entire industry. So that Sam, and as a person and as a founder, as a CEO, definitely deserves a lot of respect for that.
Well, and I am an admirer of his and yours, but I'm also an admirer of Andreessen Horowitz. Ben Horowitz spoke at our event in 2019 before the pandemic. After your third hackathon this past May, A16Z became enthusiastic about Solana, and they began the process of validating and investing in Solana. Tell us about that experience.
We've also, we're in Silicon Valley. We've talked to them a bunch of times, and the biggest question was that, is it possible to build a new ecosystem that is not really separate from Ethereum, right? A whole new set of applications, new operating system, new ways for developers to build these things. That was a big risky question, right? Is there going to be developer adoption? And what we saw over the year that since we launched was that there's a large portion of devs that are ready to go and build in different kinds of tools, and they see these technologies as tech stacks, like as they should. As an engineer should, when they look at Ethereum or any of these chains, they should look at it. Here's a technology that can do features X, Y, and Z at this cost. I'll pick the best one for my product, right? And we saw that being proven true, and we saw this really massive explosion in the ecosystem of devs coming in to build. We had like prizes in our hackathons, for seed funding, and these were like, I think the DeFi hackathon had like a prize of 200,000 potential funding for a team that wins it. But before the hackathon was even finished, there were, I think, over 10 teams that have raised over $1 million each already. So like what we saw was that teams that have founders that want to build a new business, right? Like a whole new company running on top of Solana. They saw their eyes light up when they saw the performance and the benefits of the network, the infrastructure, and they were able to build a product, an MVP, and raise funding in those like 4 weeks that we ran the hackathon without like us even being a main driver of that. So this was really, to me, like a sign that we're onto something, and I think a sign to everyone else.
So how would you then, if you had to tell people, what is the difference between Ethereum and Solana?
Short version. It's like it's like when Intel shipped the multi-core chip. Like we're the multi-core. We're the massively multi-core version of a single CPU processor. Like you can think of it as that transition in the hardware when we went from single speed networks to now like very parallelizable high performance networks.
So can, as a result of that, okay, can Ethereum catch up? Can they create applications that can make them, or innovations that can make them multi-core?
There's different ways to approach this. So Ethereum and Ethereum 2 and the way it's designed, the way I make this kind of morbid analogy is that Solana is designed as you build a nuclear first strike detector, right? You want to maximize the number of sensors you have and how hard it is to break into all of these sensors and how hard it is to corrupt the entire network. Ethereum 2 is designed so there's some survivors left after the attack to tell you that it happened. So, which is a different thing, right? You're building these shards and you're building a network which is maybe slower, but in some ways has some different properties which is what Ethereum 2 and their vision is going after. And some of the ways you can think about it in terms of like, well, what do I care as a user? In finance, you have these things called settlement, platforms, things that do settlement, right? And then you have exchanges and everywhere where execution and clearing occurs. I like to think of like, if you were to apply like a financial lens to it and think of it only from decentralized finance from that application, Solana is the execution layer that can connect to a bunch of different settlement layers, right? Ethereum is a settlement layer that can connect to a bunch of different execution layers. So we're as a network, right? The hardware and the design and everything else that Solana is built for is to be this global place for execution, price discovery. In my mind, this is where all the fun innovation occurs, right? I can name a dozen companies that do trading, exchanges. I don't know a single settlement platform.
Okay, no, listen, that makes sense. I want to shift gears before I get John involved. He's the millennial Anatoly, so he's going to try to ask better questions than me, okay? But you're older than him, so I want you to defend me. But before I get him involved, you have this major NFT project called Degenerate Apes. Now, where did the name come from? First, is that just another name for human beings, Degenerate Apes?
I guess so, yeah.
Yeah, I mean, I'm sure that's basically what it is, right? We're all just degenerate apes. And so now you've launched this on Solana. It is an incredible
launch this. this was an artist, a random artist.
Yeah,
from
let me
New
rephrase
Zealand
that.
like
A random artist launched this on Solana. I'm sorry, I wanted to rephrase that to make sure that it's accurate, but it's an artist that came up with these degenerate apes. It's on Solana. People are super enthusiastic about it, but I think it's something important for the validation of Solana. So tell us what that is.
So, again, it's really tough to show that Ethereum's network effects are not a moat, right? Like until somebody actually shows and proves that consumers really care about the speed and price and like the use of the network more so than the Ethereum of it, right? Like that is called Ethereum. What they care about is the experience, right? More than the network itself. You have to go and prove it. And, this is something that we suspected was going to happen eventually. We didn't know where or how or why. And this project launched by this artist that made these, cool looking NFTs, that look like apes. They're, adorable, like I guess they're cool. And it had a positive, like viral network effects. And what we saw was that people really liked the experience, right? They cared more about the product, the art that this artist was making, much more so than they cared about what network it was on. And because Solana was cheap and fast, it never got in the way, right, of that experience. And this is what we hope to see more of that. Like as artists launch, they should pick Solana as a network because we will never get in the way, right? It's just like, you don't want to know that Qualcomm is the modem that is running inside your iPhone. You just never want it to fail. Right? You never want to have the bad experience, right? You basically want to forget about it.
John Dorsey. By the way, Anatoly, congratulations, Anatoly. What you're doing is nothing short of brilliant. And I'm sending you a big hug. And I'm wishing for even greater success for you and the Solana ecosystem.
Thank you.
Yeah, I mean, to go with your analogy, Anatoly, this is not an Ethereum bashing session by any means, but almost Ethereum is a gas-powered car. That there's gas stations all around the country, all around the world. It's easy to fill up. People use it almost by default, despite some warts on that protocol. Solana is the Tesla, early stage Tesla of the crypto ecosystem, where once the infrastructure is there and the network effect is there to support the charging stations and everything you need, it seems like Solana has sort of the advanced tech to lead sort of the Web3 revolution. Is that sort of the way you guys look at it? Is that in terms of network effects, it's all about creating projects like the Degenerate Apes, and then we'll talk about Star Atlas in a second. But just how important are those network effects?
So I think like there is a difference between like settlement and execution, and it's just I'm not sure that you can design a network that could be best at both, right? So if you're like folks like Ethereum, they're coming in from this idea of self-sovereign money and Bitcoin and what that is, and what they're really focused on is competing with Bitcoin and this idea that you can have a global currency, right, that is self-driven and self-sustaining. And settlement becomes the most important thing about that feature. You almost have to pick every time you make an engineering decision, you have to pick that as the most important factor, right? Like no matter what. And we're coming in as like communications, Qualcomm folks, and I'm looking at this thing. Okay, censorship resistance is the most interesting thing that separates a blockchain from a database. And the use cases that are interesting there are this idea of decentralized finance, price discovery. How do we optimize for that? How do we optimize for the execution layer? It's possible that, there's no proof, or at least I haven't, no one's really tried to build one, but in my gut kind of engineering level check, it's really hard to do both. It's like a Pareto efficient problem. Like what we're doing is really going to be the fastest possible way to do price discovery, like execution, but the settlement final state can occur in any number of networks. And you see that already with like the number one trading pair on Serum is Bitcoin against USDC. None of those are natively issued tokens on Solana, right? Somebody else guarantees settlement of Bitcoin, Circle guarantees settlement of USDC, and that's fine, right? Like those are just two different goals. And like what ETH2 will deliver is a cheaper version of that, but and like the way that it's designed is never going to be as fast, as responsive to user events as something that we're building, which is, let's beat NASDAQ. Let's get put NASDAQ out of business.
Right.
that is like as close to this idea of information propagating through a censorship resistant network at the same speed as news. Like as financial news travels around the world and makes impact on prices, we want to be competitive with that speed of light to fiber.
Right. And, the idea of decentralization, there's a lot of things in what people would deem as crypto that are not actually decentralized. And especially as crypto becomes institutionalized, it's sort of a magic word in crypto. A lot of times decentralization goes away. You talked about somebody like Sam Bankman-Fried, who has a centralized exchange, also investing in a decentralized exchange with Serum that's built on top of Solana. But there's an interesting idea around the Nakamoto coefficient. I think Balaji, general partner at Andreessen Horowitz, first coined the term, but it talks about the true decentralization of different blockchains. Bitcoin is famous as a proof of work blockchain that it requires 51% of users on that network in order to basically corrupt or take over the network. Proof of stake blockchains, the Nakamoto coefficient is lower, but Solana, in terms of proof of stake blockchains, has the highest Nakamoto coefficient. Can you talk about why that is and why that's important?
Yeah, and this is back to that analogy that I made of like surviving the nuclear strike versus detecting it. And again, like decentralization is a meaningless term, and there's a lot of ways to look at it. And fundamentally, everyone should go read through that article by Balaji. But basically, like, given all of these different ways to look at it, what is the smallest way we can draw a circle around the parts of the network that if we destroyed that piece, that the network would halt, right? Or the network would be corrupted in some way. And that's really like that, like minimum surface area for an attack. In consensus specifically, and why this matters is specifically to price discovery or execution of like orders and flow, information flow, is if you have a Byzantine fault tolerant system, if you control more than 33% of the nodes of the stake, the voting in that thing, you can decide the order of events. And that means that I have 33% of the stake, and hedge fund A wants to transfer dollars from Binance to Coinbase, and hedge fund B wants to transfer also dollars from Binance to Coinbase. I get to pick which one goes first, right? And that's a problem, right? That's a problem for finance. I can't corrupt the state. I can't steal anyone's money, right? I can't like create the network and cause it to sign with your keys that guarantee that you have custody. But I can definitely pick the winners and the losers. And for some use cases, that doesn't matter. And settlement, I think, is one of those use cases where order of events no longer matters, right? It doesn't matter if hedge fund A gets settled eventually, first or second, within some reasonable time frame. And that's kind of the idea of self-sovereign money and Bitcoin. Their form of censorship resistance is that if I have my keys, I have my Bitcoin, and I submit a transaction that maybe not today, but within weeks, so definitely months or years, somebody will eventually process it, right? Like there will be at least one honest block producer and enough of them in a row to guarantee its settlement. But the use case that I think is more interesting is like in real time, there's orders, there's trading, all this information that's being locked up in NASDAQ, locked up at NYSE and CME, and decentralized finance being the primary use case of that. You really need to guarantee that it's as hard to corrupt as possible. And it'll never going to be perfect without becoming centralized and then taking on that responsibility yourself. But the only way to guarantee it is to maximize the minimum set of independent operators that add up to that 33%. So it becomes much, much harder to draw that circle to make that set of that sub-network that can collude and start corrupting the information flow.
Right.
So this is really like the number one parameter that we're focused on. And because of that, a lot of the engineering designs kind of flow from that. It has to be super high performance. It has to process a lot of messages. It has to do a lot of cryptographic signatures. and you end up with something that is quite opposite of Ethereum 2 or any other competitor networks that are more focused on the settlement fees. So that I think kind of when we first started building Solana, I thought everyone else is going to do the exact same thing because it was so obvious to me. Like, this is the most important thing of these networks is the censorship resistant piece. The only way to ensure that actually works is to maximize the number of parties that are participating in the network. And the only way to ensure that that's possible is to optimize the hell out of it. Actually make it possible to handle all these messages. So to me, that seemed like the obvious thing, but it turns out that basically we're the only ones really focused on that. And that's, I think, the most important thing for finance. Even something like payment, like you have somebody like big fintech company that's doing payments, Visa or whatever, they need to guarantee that when merchants start receiving these payments, there isn't some set of small parties that can, stop the flow of volume, right? Like, because their business, their livelihood depends on it. They actually care that this stuff gets settled within seconds versus days later.
Right. Yeah. I mean, one of the things I admire about you and I admire about Solana is you are focused on speed and you're focused on performance. I think we're very enthusiastic about the crypto space generally, but there is a lot of cheerleading that goes on. There's a lot of financially driven decisions, whether it be, the big wave of ICOs that took place in 2017 or some of the other, more nefarious things that go on in that ecosystem. But you guys have had your heads down from the beginning, focused on building the highest quality product and not paying attention to the price of your coins or anything really financially driven. But when you were building Solana in early 2018, the bottom fell out of the crypto market. It was sort of a challenging time for a lot of people that, once became enthusiastic about crypto and then pulled back a little bit. Goldman Sachs famously shuttered their plans to open a crypto trading desk. Did that pullback, that sort of bottom falling out of the crypto market in 2018, was that challenging at all for you? Did you lose heart at all? And what generally motivates you to continue building Solana?
It was like the meteor strike that took out all the dinosaurs. It was definitely crypto winter, and we saw a lot of teams fall apart. We were always somewhat conservative. We never raised a ton of money. We always had about 2 years of runway, so we were always we got to build this thing as fast as we can and really focus on the key product that we think is going to make a difference, right? Like the key differentiator. So from our perspective, it was probably, one of those unexpected things that there's no way we could have wished for it, but was extremely beneficial to us as a team, right? Like, it really forced us to focus and build the right thing. This is like every Silicon Valley book has all these lessons. You should do X, Y, and Z, right? Like, focus on the key thing, but the product, go for the most important users, worry about product market fit above everything else. But, a lot of luck and the environment forces you to make those decisions. I think given all the options, some of our competitors raise hundreds of millions of dollars, I think in some ways it de-risked them way too early, right? They didn't have the same kind of hunger and drive.
Right. This Salt Talks is a series that we bring to both people that are very deep in the crypto world and also some people with a little bit less knowledge and experience. So this is one of those questions that is addressed more to that introductory crowd. But you've been very vocal about the fact that if you don't control your keys, you don't really participate in crypto in its truest sense. So for those that are less familiar, could you explain the reasons why controlling your keys is so important?
So in a financial way, purely from financial perspective, if you have custody of your keys and there's some value associated to those keys, 100% of the network can be corrupted and it's impossible for it to steal your funds, right? Like, it's totally guaranteed. This guarantee that your keys provide is the cryptographic certainty that you have custody of that thing. And, when you're talking about something like dollars, it's a peer-to-peer guarantee between you and Circle, which has this ledger, right, that's represented by, this cryptography in Solana, but the money is in effect in a bank, right, somewhere. So that peer-to-peer relationship, I have keys that represent dollars in Solana. Circle has those dollars in the bank. The entire Solana network could be 100% corrupted, and there's no way to break that as long as the keys are secure, like between you and Circle. Now, that's really what allows the state to scale and really allows the network like Solana to operate much more like a switch, like an AT&T or like a pure infrastructure information provider. The only thing that it's doing is making sure that this data is propagated and everybody can receive it, but it really has no control over the values or anything that is the money that's actually in store. It has zero control over it. So that's a very important thing. But from a decentralization kind of like, where is this industry going? If everybody holds their funds at Coinbase, and Coinbase has a single key that represents all of those assets, it becomes kind of like the focal point for like finance, right? It might as well use a bank, right? Like, what is the difference? There's differences, right? There's like security between Coinbase and the SEC. You got better APIs, maybe cheaper wires, but the users don't actually get to have those guarantees because they're still on the hook for Coinbase to, do the right thing.
Right.
Like removing all those obstacles is what allows an app developer, like an application developer that wants to provide, returns to their users to build something purely with code, never trusting, without any trust, or never taking custody of anyone's funds, but allowing to coordinate, 100 million cryptographic keys to borrow and lend from each other and start giving them real returns without any middleman. Like
right.
if this is possible in software, you don't need a third party like Coinbase in the middle to pay their 3,000-4,000 engineers, right? This is like, you look at something like Uniswap. If folks have never heard of Ethereum, are, fiercest competitor, right? Like Uniswap is like 10 people. It's an exchange that has like 32,000 pairs traded on it for 10 people, because it's a bit of code that just coordinates people, right? It doesn't actually take custody. And this is where I think the power of crypto is this ability for very small teams to build highly leveraged software that creates these new financial instruments or similar instruments to what you have in traditional finance, but it removes all possibilities of failure, fraud, and that's the magic of it, right? You actually need people with self-custody to go exercise their power.
I mean, one of the things we're so excited about for SALT in September is getting you, Sam, and Jeremy Allaire from Circle on stage together to talk about just basically the new financial infrastructure that you're building on sort of DeFi crypto rails, if you will, between USDC, the stable coin that was launched by Circle, obviously what Sam is building at FTX and also at Serum, and how Solana all plays into that as basically the optimum base layer for all that. But I want to talk about, and this is not something that you guys developed, just to be clear again, but Star Atlas is a play to earn game that's being launched on the Solana blockchain that people are very excited about. The idea of play to earn games in general fascinate me and I think have a massive future. Could you talk about play to earn gaming? Could you explain to people what it is and why there's so much excitement around Star Atlas?
So gaming, I think, is one of those new opportunities for crypto, but something that everyone always believed was going to happen because, like, I don't know if you ever played like Ultima Online, EverQuest, World of Warcraft. I started with Ultima Online. I remember as a teenager, I went to the bank, got a cashier's check, mailed it to somebody through the snail mail to get an item in Ultima Online. Right. So, so that process of a person, right, like actually paying money for a digital item that they have no ownership of, it exists, right? There's secondary markets for World of Warcraft gold. Ultima Online as well had some, and like EVE Online, which is a space game with very sophisticated economies around its units. Those things exist and they run. And Star Atlas is an attempt to make it fully on chain, use all the same leverage and technology that, like, you have the best market makers in the world using Serum to trade. You can now use that inside an exchange for crystals or energy units, whatever, inside Star Atlas to build your spaceship. Right. How cool is that, right? Like, it's all in one single giant computer, right? doesn't really care if it's trading Bitcoin and dollars or, in-game like units. That is like, that's the aspect of it. It's like, can we build a game that is owned by the players that are generating their own content? And that content is valuable because there are consumers, like players, that just want to kind of pay. They don't want to play through the game. They don't want to earn those items, but they just want to have the experience, right? And is that self-sufficient? Like, do you have enough people that want to effectively own the game and be those content creators and earn a living from it, and enough consumers that want to just experience parts of it? It's I think something that feels like science fiction, right? So probably 5 years away, so we should start working on it now, right? Like
Ready Player One.
Yeah,
there's
exactly.
The popular book and movie Ready Player One that I read the book many years ago and said, wow, I could see our future resembling that in some way. But then you start to look at things like, metaverse gaming, play to earn gaming, something like Star Atlas. And you're like, wow, we're not that far away from that future where people are going to derive a lot of pleasure and probably spend a lot of time in these virtual worlds. And it starts to help you crystallize in your mind why NFTs are so valuable and why, virtual digital real estate has value. Because at the end of the day, if we live in a highly virtual world, this is an oversimplification, but there's no reason why those things shouldn't have the same type of value that people derive from physical goods and physical real estate. Last question I have for you is, what is in your plans for the future? Obviously, you guys have had an explosive summer of growth. Like I mentioned in the opening, it's been Solana summer, even though you guys are very humble and or avoid the cheerleading that exists in a lot of areas of crypto. But what are the next topics of focus for you and the team at Solana Labs?
So on we're super engineering heavy company. Like, we're mostly focused on the boring side, which is like, let's build a fast operating system, fast database. And it's almost like it's oddly like boring work. We have like a bunch of, performance improvements. It's mostly downhill engineering. Like, you gotta benchmark, test, analyze, improve. And that's something we've been doing, I think, for the last year, since we launched. And we're continuously incrementally improving everything. Maybe that's part of the success story, is that like iteration is the most important thing when it comes to engineering. I think that was an Elon Musk quote. So that's really like our goal, is how do we iterate and improve the network as fast as we can.
Right. Do you think your focus on development is something that attracted people like Sam to the project? And I think Sam, as much as anyone, he again takes sort of a sober view of crypto. He understands the bull case. He understands the bear case for certain protocols and for the industry as a whole. Do you think your heads down mentality is something that's attractive to hardcore developers themselves and also people that are building on top of blockchains?
He's not an engineer, right? So this was really like, I think, in a lot of respects, this was driven by the engineering team that was like, okay, this is going to work. Let's just go build it. It feels like, to outside folks, it feels like there's some master plan. It's not. There's not. There's that kind of like fire-driven development. What is the most important thing that we need to fix right now is very much part of our daily routine. And what that means, I think, for the future is I think more kind of like, like I mentioned before, right? You don't notice Moore's law when you're in it, but those improvements, right? Exponential improvements occur over large spans of time, become really, really staggering. So this is what I hope we should see, like in the next 4 to 8 years. Imagine 100 million people with self-custody in a single network, or 1 billion people with self-custody in a single network. What impact that will have is like very unpredictable. It's like me in 1996 telling you that sharing pictures of cats and babies with your friends and family is going to be worth $1 trillion. You would tell me that I'm crazy, right? Like, so how do we predict where this stuff goes is really, really hard for us. It's like the folks that are heads down in the hardware and in the software.
Well, Anatoly, it's been a pleasure to talk to you again. We're super excited about Solana. I think the more you talk to people in the space, the more impressed they are not only with the amazing technology you've built, but also the power of the network effects of some of these projects that are coming online. And certainly you guys have a ton of momentum. So we're rooting for you. We're excited to see you in person in September and have that conversation between you, Sam, and Jeremy on stage at SALT. And we'll be, again, rooting for your success going forward. But thank you so much for joining us. Anthony, you have a final word for Anatoly before we let him go?
I just think it's a brilliant exposition of what you created. And, part of genius, frankly, is simplicity. I think you did an amazing job of explaining where things are and why you guys are on the cusp of something huge. It's already huge, but it's going to be even exponentially more huge. So congratulations to you, Anatoly.
Thank you so much. Appreciate it.
And thank you, everybody, for tuning in to today's SALT Talk with Anatoly Yakovenko, the founder of Solana. Just a reminder, if you missed any part of this talk or any of our previous SALT Talks, you can access them on our website on demand at salt.org/talks or on our YouTube channel, which is called SaltTube. We're also on social media. Twitter is where we're most active at SALT Conference, but we're also on LinkedIn, Instagram, and Facebook as well. And please spread the word about these SALT Talks. We love educating people, especially on this new emerging asset class, crypto, Web3, all these types of topics. So again, please share this talk with your curious uncle. But on behalf of Anthony and the entire SALT team, this is John Darcy signing off from SALT Talks for today. We hope to see you back here again soon.